The present value of cash inflow can be calculated by two methods. One method is we can prepare the table to find out the present value of cash inflow. The second method is by using a simple formula we can find out the present value. The formula can be used only when the annual cash inflows are constant. The formula is PV of cash inflow. PV of cash inflow is equal to constant annual cash inflow, constant annual cash inflow into multiply PVAF, present value of annuity factor. PVAF stands for present value of annuity factor at the rate of, what is the rate of required rate of return we have to take? 10%. For how many years? What is the life of the project? 5 years. So whether you by using this formula or by preparing the table, we'll get the same PV of cash inflow. So when it is constant, when the PV of cash inflows are annual cash inflows are constant, we can easily get the PV of cash inflow by using this formula instead of making the table. Here in our case, the cash inflows, constant cash inflows every year is 50,000. Now we need PV of annuity. The present value of annuity we can get from the table, PV of annuity table, or else we can get it from the calculator. By using the simple calculator we can get PV of annuity. How to get PV of annuity? Simply what we have to do is 10%. So 1 divided by 1.1. 1 divided by 1.1 is equal to 0.909. 0.909. I am keeping this 0.909 in the memory. This is the memory. Yeah, 1 year. For 1 year I have kept that value in memory. Second year is equal to memory 2 years. Is equal to memory 3 years. Is equal to memory 4th year. Is equal to memory 5th year. After 5 years, recall the memory. 3.791. 3.791 we got. So by using a simple calculator, we have calculated the annuity value. Again I repeat, for 1 year, 1 divided by 1.10. 10% है, इसीलिए 1 divided by 1.10. So for 10% we got the value, put it in memory. Then is equal to memory, is equal to memory. जितने टाइम, जितने ईयर्स आपको कैलकुलेट करना है उतने टाइम मेमोरी में डालेंगे. तो 5 टाइम्स मेमोरी में डाल दिए. फिर रिकॉल द मेमोरी, MRC, दैट इज मेमोरी रिकॉल एंड कैंसलेशन. तो मेमोरी रिकॉल को प्रेस कर दीजिए, यू विल गेट द एन्युटी फैक्टर. सो वी गॉट 50,000 into 50,000 into 3.791, that is equal to 1,89,550. 1,89,550. Here we got 1,89,500. 50 rupees difference we are getting due to rounding off. Due to rounding off error, small difference you will get. That is negligible. That is negligible. We should not consider that one. But from the coming problem, what we will do is, whenever annual cash inflows are constant, it is better to use annuity. When the annual cash inflows are not constant, fluctuating, we'll use the table to find out the PV of cash inflow. This is the first problem where we have calculated NPV. NPV, net present value, is equal to PV of cash inflow minus PV of cash outflow. PV of cash outflow is given in the problem. Now we'll take up the next problem. Now we'll start the next problem, that is problem number 5. Problem number 5, you see. Calculate profitability index, PI. Calculate profitability index from the following data. Present cost 10 lakh. Present cost means present value of cash outflow, initial investment, 10 lakh. Cash inflows are given: first year 2,80,000, second year 3,60,000, third year 4 lakh, fourth year 5 lakh. Here annual cash inflows are not constant, so to make the table to find out the PV of cash inflow. And the cost of capital is taken as 10%. First of all, NPV and profitability index both are similar. In net present value, we find out the difference between PV of cash inflow and PV of cash outflow. Whereas in profitability index, we take the ratio. PV of cash inflow divided by PV of cash outflow will get the PI, profitability index. तो दोनों के लिए प्रोसीजर सेम है, हमको वहां पर भी पीवी ऑफ कैश इनफ्लो, यहां पर भी पीवी ऑफ कैश इनफ्लो. एनपीवी कैलकुलेट करते वक्त माइनस करना है और पीआई कैलकुलेट करते वक्त डिवाइड करना है. दैट इज द डिफरेंस. कम ऑन, सो विल कैलकुलेट कैलकुलेशन ऑफ profitability index. Profitability index, PI. This is another technique of evaluating capital budgeting proposals. Here, then cash inflows. Then we have PV factors at the rate of 10%. Then PV of cash inflows. Years are given 1, 2, 3, 4. Only 4 years data is given. This is the PV of cash inflow. Now we'll take down the cash inflows given in the problem. The cash inflows are 2,80,000, 3,60,000, 4 lakh and 5 lakh. Cost of capital is given in the problem 10%. So we take the PV factors 10%. The PV factor at 10% first year is 0.909, 0.826, 0.751, 0.683. You can get this value from the calculator. Now, PV of cash inflow. Present the value of cash inflow. Multiply the cash inflow with PV factors. Multiply cash inflow with PV factors. So 2,80,000 into 0.909. You will get 2,54,520. Similarly, 3,60,000 into 0.826. You will get 2,97,360. Similarly, 4 lakh into 0.751 is equal to 3,400. Last one, 5 lakh into 0.683. You will get 3,41,500. These are the PV of cash inflows. Now we'll find out the total. 254,520 plus 297,360 plus 3,400 plus 3,41,500. You are getting 11,93,780. This is called present value of cash inflow, right? Now PI, profitability index, is equal to the formula PV of cash inflow divided by PV of cash outflow. PV of cash inflow we got rupees 11,93,780 divided by cash outflow is given in the problem 10 lakhs. In the problem it is given 10 lakhs. So divide it, it will be 1.19378, or we can write down 1.19. 1.19 is the profitability index. It's very easy to calculate. PI formula, PV of cash inflow divided by PV of cash outflow. What does it mean? 1.19. For every 1 rupee of investment, we are getting 1 rupee 19 paisa of cash inflow. Outflow 1 lakh, inflow is 1.19. This is the profitability index. Now, see the next problem. Problem number 6. Sixth problem. Calculate NPV from the following data. Investment in fixed assets 4 lakh. Investment in permanent working capital 1 lakh. This is the new point here. The cost of the asset is 4 lakh. But along with the purchase of asset, we have to incur some amount on permanent working capital. So permanent working capital is also one of the cash outflow. So total cash outflow is 4 lakh plus 1 lakh, 5 lakh. But here we have to make one assumption. The assumption is working capital will be attached to the asset as long as the life of the asset is there. Once the life of the asset is over, that will be released back. That will be free. That means the permanent working capital we are going to get back at the end of the life of the project. So ये दो बार आएगा. The permanent working capital will be taken in PV of cash outflow, and also permanent working capital will be taken as an inflow in the last year. Here the problem, project inflows are given year 1, 2, 3, 4. 4 year is the life. So at the end of 4th year, we are also going to get back our working capital. Rate of discounting is 12%. PV factors we have to take 12%. So here in this case, we have to find out NPV. So first of all, cost of the project, cost of the asset. Cost of the asset is 4 lakh. Add permanent working capital. Permanent working capital is 1 lakh. So total is 5 lakh. This 5 lakh is called PV of cash outflow. Present value of cash outflow. Now, in order to find out the PV of cash inflow, we make the table. Cash inflows. Then PV factors at the rate of 12%. Then PV of cash inflows. Year 1, 2, 3, 4. 4 years are given in the problem life. But at the end of 4th year, again I am taking 4th year. This is the working capital release. So twice I am taking 4th year. PV of cash inflow. The cash inflows are given 1,80,000. 1,80,000, 2 lakhs, then 3 lakhs, then 3,20,000. These are the regular cash inflows, operating cash inflows. We are getting these. Apart from that 4th year end, we are going to get back the permanent working capital. The permanent working capital is 1 lakh. So 1 lakh I am taking here. Now we need 12%. 12% PV factors. So again we'll go back to the calculator to find out at 12%. 12% means 1 divided by 1.12. 1 divided by 1.12 is equal to 0.892 you are getting. 0.892. 0.893. Then again is equal to 0.797. Again is equal to 0.712. Again is equal to 0.635. 636 I'll take. Again 0.636. So with the help of normal calculator, 1 divided by 1.12 is equal to, then you'll get first year. Then simply put is equal to like that, second year, third year, fourth year, we got the present values. Now we have to find out the PV of cash inflows. So it is given 1,80,000 into 0.893. You are getting 1,60,740. Similarly 2 lakh. 2 lakh into 0.797. You are getting 1,59,400. 3 lakh into 0.712. You are getting 2,13,600. Similarly 3,20,000 into 0.636. 2,03,520. Lastly 1 lakh into 0.636. 63,600. Now we add up 1,60,740 plus 1,59,400 plus 2,13,600 plus 2,03,520 plus 63,600. You are getting 8,860. 8,860. This is the PV of cash inflow. Ultimately, what we have to find out the NPV, net present value. So for calculating net present value, PV of cash inflow is equal to 8,860 minus PV of cash outflow is equal to 5 lakhs. You will get 3,860. This 3,860 is the NPV, net present value. So what is the new point we came across in this problem? The permanent working capital should be taken as an outflow, and also the permanent working capital should be taken as an inflow. In the case of outflow, we are adding up to the cost of the project, and in case of inflows, first we take 4 years operating cash inflow, then 4th year end working capital 1 lakh rupees. Here we have taken 1 lakh, here also 1 lakh. And both these are in 4th year. So PV factors are same for this. That's it. Now, see the next problem. Problem number 7. Problem number 7, you see. A firm is contemplating the following projects. Which one is better according to you? Year 0, 1, 2, 3, 4, 5. 0 year means in the beginning, right now, at present. तो 0 year में हम investment करते हैं और future years में हमको cash inflow मिलता है. तो 0 year में -1 lakh is given. It means 1 lakh rupees is the cost of the project. PV of cash outflow. तो minus denotes that it is an outflow. तो 1 लाख रुपये कॉस्ट ऑफ द प्रोजेक्ट है, चाहे वो ए प्रोजेक्ट हो या बी प्रोजेक्ट हो, दोनों का कॉस्ट सेम है 1 लाख. देन फर्स्ट ईयर, सेकंड ईयर, थर्ड ईयर, फोर्थ ईयर, फिफ्थ ईयर, 5 ईयर इज द लाइफ. तो 5 ईयर कैश इनफ्लोज आर गिवन. ए प्रोजेक्ट 25, 24, 23, 20, 15 फ्लक्चुएटिंग. बी 35, 20, 24 फ्लक्चुएटिंग. ऑन द बेसिस ऑफ एनपीवी, प्रॉफिटेबिलिटी इंडेक्स एंड पेबैक पीरियड, evaluate the projects assuming a 10% discount rate. So in this problem you are required to apply 3 techniques. The 3 techniques are NPV, PI and payback period. ये तीनों टेक्निक अप्लाई करके हमको इवैल्यूएट करना है कि which project is better, A project or B project. The rate of discount is given in the problem as 10%, required rate. So first we calculate the NPV and PI. NPV and PI. Calculation of NPV and PI, profitability index. Year column. Then second column is PV factors at the rate of 10%. Then we'll take 2 broad columns. This is A project and this is B project. 2 sub-columns we are making. This is cash inflow and this is PV of cash inflow. Here also we have cash inflow. Here PV of cash inflow. So in one table itself I am going to find out the PV of cash inflow of both the projects. Right? 5 years is the life. 1, 2, 3, 4, 5. The life of the project is 5 years. PV of cash inflow. Now 10% discount rate. At 10% discount rate, the PV factors are 0.909, 0.826, 751, 683, 621. These are the cash inflows, PV factors. We know it, 10%. Now, cash inflows are 25,000. Second one, 24,000. Then 23,000. Then 20,000. then 15,000. These are the cash inflows given in the problem for A project. For B project, the cash inflows are 35,000, 20,000, then 24,000, 23,000, last one is 18,000. These are the cash inflows given in the problem. Now see here, when we multiply 0.909 into 25,000, you will get 22,725. Similarly, multiply 0.826 into 24,000, 19,824. Then 23,000 into 0.751, 17,273. Next 0.683, 13,660, 9,350. These are the present value of cash inflow by multiplying PV factors with cash inflow. Similarly, PV factors with cash inflow, we are going to get 31,815, then 16,520, then 18,024, then 15,709, and 11,178. What we have done, we have multiplied the PV factors with these cash inflows to get this PV of cash flow. The total of PV of cash inflow is 93,246. Here we got 82,797. So we got the PV of cash inflow of A project and PV of cash inflow of B project. Now we'll calculate the NPV and PI. For calculating NPV and PI, I am taking a table like this: A project, B project. PV of cash inflow minus PV of cash outflow. This you will get NPV. Then PI, profitability index, PV of cash inflow divided by PV of cash outflow. PV of cash inflow, we got 82,797 and 93,246. And PV of cash outflow is 1 lakh rupees given in the problem. In the problem it is given PV of cash outflow 1 lakh. So ultimately you are getting minus 17,203 and here minus 6,754. Both the projects are having negative NPV. अगर decision लेना रहता तो हम दोनों project को reject कर देंगे. Both the project will be rejected. Then profitability index, PV of cash inflow divided by PV of cash outflow, 82,797 divided by 1 lakh is equal to 0.83 we can take. Similarly, 93,246 divided by 1 lakh is equal to 0.93. Or two techniques we have applied. The two techniques are NPV and PI. NPV दोनों का नेगेटिव है, दोनों को रिजेक्ट, और प्रॉफिटेबिलिटी इंडेक्स दोनों का लेस देन 1 है. द डिसीजन क्राइटेरिया इन PI इज if the PI is more than 1, accept the project. If the PI is less than 1, reject the project. So in this case we reject the projects. Both the projects are rejected according to NPV as well as PI. Now it is asking you to calculate the payback period. It is asking you to calculate the payback period, PBP. Previous problems we have seen, there are two methods of calculating the PBP. The first method, formula, initial investment by constant cash inflow. This formula will be applied whenever cash inflows are constant. But in our problem, the annual cash inflows are not constant. So we take cumulative cash inflow. So first, calculation of PBP, payback period. The cash inflows not constant. Cash inflows are not constant. So we find the cumulative cash inflows. Here, cash inflows, cumulative cash inflows. Year 1, 2, 3, 4, 5. 5 years. The cash inflows are given in the problem. In the problem, cash inflows are given 25,000, 24,000, then 23,000, then 20,000, and last one is 15,000. Now cumulative, first 25,000. 25 plus 24, 49,000. 49,000 plus 23,000, 72,000. 72 plus 20, 92,000. 92 plus 15, 1,07,000. These are the cumulative cash inflows. Now our initial investment, cash outflow. Cash outflow is 1 lakh. Cash outflow is 1 lakh. Now check, is there any cash outflow in cumulative cash inflow 1 lakh rupees? Actually, PBP is that period in which the cumulative cash inflow should be equal to cash outflow. Cumulative cash inflow should be equal to cash outflow. तो यहाँ पर 1 लाख रुपए चाहिए, है क्या 1 लाख रुपए? नहीं है. We are getting 92,000 in 4 years. 92,000 in 4 years and 1,07,000 in 5 years. We don't require 92,000, we want 1 lakh. We don't require 1,07,000, we want 1 lakh. 1 लाख रुपए चाहिए. तो PBP lies between 4th year and 5th year. PBP lies between 4th and 5th year. 4th और 5th year के बीच में PBP है. Now this PBP will be calculated by interpolation like this. Amount recovered, I am writing down here. First I'll clear off this board. Now, amount recovered up to the end of 4th year is equal to 92,000. 92,000 are recovered up to the end of 4 year. Now, therefore, amount to be recovered in 5th year is equal to 1 lakh minus 92,000 is equal to 8,000. 1 लाख रुपये में से 92,000 रुपीज हम रिकवर कर लिया 4th ईयर में. अभी 8,000 रुपए रिकवर करना है 5th ईयर में. तो कैश इनफ्लो ऑफ 5th ईयर, कैश इनफ्लो ऑफ 5th ईयर इज 15,000. PBP is equal to 4th year, पहले पूरे 4 साल मिल रहे, plus how much amount we want to recover in 5th year? 8,000. And how much is the cash inflow of the 5th year? 15,000. यानी कैश इनफ्लो 15,000 है, वो 15,000 में से हमको चाहिए 8,000 रुपए, तो प्रपोर्शन हो जाएगा 8,000 डिवाइडेड बाय 15,000. तो 4 प्लस 8 डिवाइडेड बाय 15 you will get 0.53. So 4.53 years. That's all. 4.53 years. This is the PBP. So in this way we calculate PBP if the annual cash inflows are not constant. Now we take project B. This is project A. Now we take project B. Same procedure I am following. So year 1, 2, 3, 4, 5. See, same 1, 2, 3, 4, 5, same table I am continuing. So the cash inflows for B project is given. The cash inflows for B project is 35,000, 20,000, 24,000, 23,000 and 18,000. Now cumulative cash inflows. The cumulative cash inflows are first one 35,000, then 55,000, 79,000, 1 lakh